Hello, traders, and happy Valentine's Day. It is February 14th, Wednesday, and we are going to do our live event for this week. I'm going to start very quickly with the market. You can see that we had a gap up. This is a 5-minute chart. You will see the market in the right-hand side during the course of the presentation, and you can see how we are currently making a new low of day. Not unexpected. Before I get into my pick from last week, I just want to show you what you're missing if you're not in the chat room. These are my comments from 9:02 this morning. I'm always trying to prove to you that what I say actually materializes. So you can see here that so far so good. The market's gapped up. We're holding the gains. This is the point I want to have you focus on. The danger would come on a tenuous rally in the next bearish cycle. That would give buyers time to enter the wimpy rally, and it would indicate that buyers are not that aggressive and that there is still some selling pressure. The move lower off of that high is where we could run into trouble. There's your bearish cross. There's your gap higher, your compression. There's your little move here. We get two red candles, and I'm reiterating my previous comments that came at 9 o'clock this morning, and now we've got that follow through selling. So I'm going to give you my picks from last week. PANW was the long that I highlighted. That has actually been very nice, and you can see that a week ago we were right in here on this nice breakout bar. You can also see that we are higher than that live event, and the stock has had to weather a market pullback yesterday, a pretty severe one. So PANW worked out well. We're in day trading mode. We are waiting for a market pullback. Mara was one that I highlighted Sunday, selling an out of the money bullish put spread, keying off the $19 level, selling those for a 75-cent credit. That was a naked put trade. 2 weeks out, February 23rd, 19 puts have vaporized. So trade worked out well. And then the other one I was kind of holding off on, not holding off, I was expecting a better move based on Friday's price action, was Microsoft. It has fallen below AVWAP-E, and it looks relatively weak. Bearish engulfing candle off of the high here, not able to recover. Everyone, please welcome Harry. Harry, how are you doing?
Spectacular. How are you, Pete?
I'm doing good. I'm doing good, and you're doing good. Your challenge is coming along nicely.
Yeah. I mean, for those just tuning in, so I'm doing got a lot of comments about, obviously I trade with large position sizes, but a lot of people said, well, my count is not that size. How do I trade with a small count balance? And I've done small count balances challenges before, some successful and some not. But I wanted to kind of give a middle of the road one, start with 12,500 and double it to get to the PDT minimum of 25K. And so right now we are in profit on that challenge. We have a couple of trades on, and it's a slow grind. Challenges like that should be a slow grind. A lot of people, when they have these low accounts, low balance accounts, what they want to do is like, oh, I got 5,000 in here, or 2,000, or even 1,000, whatever it is. The best way for me to grow it would be to sort of put it all in red or black, right? Which is, I'm going to grab some out of the money puts on Nvidia right now, or out of the money calls on Tesla because it's down so much. And if we get that pop, I'm going to double my account quickly. And sure, 50% of the time you'll do that, or less. And more than half the time, you're going to blow up your account, because your account can only suffer one big loss when you have that account size. So what I'm trying to show people is that you can build the account, show some steady gains, and do it in a meticulous way. And what you really have to think in terms of is not raw dollars, but percent gain. So if you have $1,000 account, right, and over the period of a month, you make $100 in that account. Now you have 1,100. You've had a 10% return, a 10% return on your money. So think about it this way. If you were to put that money in a bank, or put it in a CD, or put it, and you have an interest-bearing account, you'll never get a 10%. No one's going to offer you 10% return. But the upside is it's guaranteed. right? So you get 4.5%, whatever it is, and it's a guaranteed return. So you're taking a lower return for a guarantee that no matter what, you're going to make that money. The method that I'm showing you is akin to that type of guarantee because statistically, if you do this and you follow the rules and you follow the mindset, you're going to make a certain amount of profit each month consistently. And $1,000 account making $100, that is a really good profit. That would mean if you did that consistently before the year's out, you've doubled that account. There's no other instrument out there that you could put your money into and confidently double it over the period of a year. But people want to rush. People want to double that account really quickly. So I'm trying to find that mid ground because it is a challenge. So you want to follow it and be interested and engage. So it's not going to be all out of the money bullish put spreads where it's just going to sit there for a month and, oh, look, we made another 1,000, made another 1,000. So there are some mix of trades in there. Right now, I have an FDX short for one, and I bought back the short side of it. So I did it put debit spread on FDX, where I sold the 232.5 puts and bought the 237.5 puts. And I did that entire thing for a $1.60, $1.80 debit. And so what you want to do with those is they're at the money. They expire on the end of the week. You want your cost for those spreads to be 50% or less of the distance of the spread. So here it's a $5 distance between 237.50 and 232.50. So because I spent $1.80 on it, that means I have $3.20 potential profit right there. I did 10 contracts. So if FDX were to fall below 232.50 by Friday and close below it, that's a $3,200 profit on that trade. Today, though, I bought back the short strikes for a profit, around 20, 30-cent profit on that. And I'm now just letting the long puts run. Why? Because FDX is still bearish. I feel the market is filling the gap on the downside right now, which Pete will talk about. And look what happened. The long puts, when I sold those short puts, were worth $1.90. Now they're worth $2.32, and I have no short puts that are mitigating against that. So I just have straight short on FDX right now. So that's one position. What do you think of that FDX short, Pete?
I think that it is going to gain traction with the market. So it's more a function of what the market's going to do right now than anything. So far, looks pretty good. We're getting to the point to where we're filling in the gap. Just a comment on your overall trading challenge. You're right. You've got to build the account slowly. And what you've chosen to do is you have chosen to do that right up here, which is at the very, very top of the market here when we're making all-time highs, when risk is elevated and when there's a lot of uncertainty. I've been mentioning this week in the chat room that trading is a lot like NASCAR, in that you have to take your foot off of the accelerator when you're coming into a turn, and then you get through the turn, and then you step on the gas. So there are constant ebbs and flows to the market. And the problem with trading, though, is that unlike NASCAR, you don't know where the turns are. So you're always trying to anticipate when the market might run into that resistance level and then how to throttle your risk accordingly. Well, you picked one of the more challenging times to start that challenge because we could see some volatility here. You're going to get some drops like we saw yesterday. You're going to get some bounces. You're going to get some additional drops. And over the course of the next week or two, we'll be able to gauge the level of selling pressure that we have in the market. And then that is going to tell us where we go from here. So we'll be watching very quickly, very patiently to see how far this dip goes and how quickly it's resolved. Because if we get a fairly big drop, now this is such a strong market move. So I need to emphasize this. I am bullish, but I have my foot off of the gas. I am waiting patiently for this drop right here. And we've been day trading the last, excuse me, the last leg of this rally. And that's what I advocated doing last week. And you haven't missed much of the move. Almost every open is at or below the prior day's close, but you don't have the overnight risk. And that's how you can still participate in that last leg of the rally without taking a lot of risk. And there will be days when you get a nice drop and you get support on that drop, and you can day trade from the long side and you'll often get a gap reversal. Those are fantastic. So the point is that right now, from a swing standpoint, you want to be fairly passive, and we want to watch what this drop does. If we drop to this support level right here, which is approximately, let's call it 490, in this last, let's say, a week, okay, we find support, and then we should have a nice springboard to perhaps challenge the all-time high, perhaps blow through it. If this dip has more stacked red candles and it takes a couple of weeks to resolve, and we test this lower level around AVWAP-Q or this horizontal breakout here around 480, then we know that there is some heavier selling pressure and that this dip is going to take longer to resolve, and that our upside expectations should be tamed. So we're not going to get that huge release higher. Right now, we're in kind of a wait and see mode. So for Harry and his challenge, you've got a compression right here and a breakout. Boy, this would have been a really nice time to start a challenge because you could have racked up some very quick profits. Right now, you've got a little bit of a difficult market backdrop to deal with, but you've been able to navigate it really well.
I mean, I'm glad you brought that up. I intentionally chose this time for a challenge. I mean, remember when, like, in school and you had a test coming up, and so you'd study for the test and you'd look at the examples in the book or the examples maybe the teacher gave, and you're like, all right, I got this. This makes sense. And then you take the test, and the test is nothing like those examples. It's 10 times harder. And if I were to do a challenge when we were on our way up, you know, over the last 2-3 months, it probably would have, you're right, it would have been fairly easy. Just go long on NVIDIA and a couple other tech stocks and buy some in the money calls. And before you know it, the account would have doubled. But that really wouldn't have taught anyone anything. I want to teach people that just irrespective of the market conditions, as long as you're aware of the market conditions, you can navigate and you can successfully navigate and build your account. Obviously, there are going to be times where it's easier. There are going to be times where you're confident in a bullish run in the market and you're confident that you can hold those positions. And a lot of that comes into you take a position, you're in profit, and you want to take that profit because you're worried that it's going to reverse or the market's going to, all of a sudden go the opposite direction. But when you're in one of those markets where you're confident that it's just going to keep going up, you can hold that position. You can get 2, 3, 4 times the amount of profit you normally would have. And that's why it's easier to build accounts in those situations. So I wanted to specifically pick a time that there's a lot of uncertainty. You're probably going to have some pullback. I mentioned last time on this, when we did this last week, that we're probably going to see a number of tests to the 500 level, that we're not just going to blow right through 500 and not look back, that we're going to go up there, come back. It's going to take a number of times before investors are confident. I mean, you have to put yourself in the shoes of a large institution and you're looking at these levels, right? And let's face it, some of these prices are extreme, right? I'm not saying NVIDIA isn't worth what it's worth, but are you confident enough to put your money and put your clients' money into those positions? Or do you feel that you could probably get a better price if you hold off and wait until you're confident enough that you're not going to get that pullback? So there's going to have to be support forming here at 500. And then I think we start building off of that and, certainly end the year well above. But it's a good time to do a challenge. It's a good time to show people that you can put on a combination of shorts like I have on FDX. I did out of the money bullish put spread on Meta right now, which is doing great. It's moving exactly as I wanted it to, staying above the 450 level. I think that's going to just finish in full profit. UNP is down, but as you see, it's coming back today. I have until Friday on that. My mistake there probably was I could have gone out an extra week on it. I think you pointed that out last week. You're right. And I have a time spread on Lyft. I need Lyft to come in a bit more. I need it to come down probably to around 14.50 to take profit on that time spread, but I have until Friday on that. So I'm just holding off on Lyft until it comes in a bit. So right now, happy with the challenge, happy where it's going. The account is at around 13,000, so up around 500 in the first week. But if FDX drops here, UNP keeps going up. On the end of the day, that's probably going to be even in a better position. So I got a quick question here. Let's see. First, someone asked on the earnings calendar spread, how to determine whether to take call spread or put spread. Time spreads on earnings are not directional. Let's get that clear. You just want it to stay within the range. You don't care if it goes up or down. In fact, it's usually better if it drops, because then you can hold it longer, because the calls that expire that week can expire worthless, and you can still hold the long calls for next week. But overall, it's directionally independent. So we use calls because you can generally get better price differential between the two on the call side than you can on the put side. That's just the way market makers price out options. So you tend to use calls, but there's a non-directional bias there. So you're not hoping for it to go up or down. You're just hoping for it to stay within the range, right? So on Lyft, the range was plus or minus $2.50 was the expected movement on the earnings. The differential on the IV was well over 100%. And I believe the number of times historically Lyft has exceeded its earnings expectations was under 20%. So it was a good candidate for it. I just needed to come in for a bit more.
Yeah, and it looks, it's backing off the high right now, but this is a pretty nice breakout. I'm looking at it on a D1 chart, and it's got that nice trend line breakout. You've got the compression breakout. It's bumping up against resistance, trying to get through that horizontal resistance if it can, and if it keeps the retracement right now to a minimum, this could be a nice long position. So it kind of digests this gap up, kind of moves sideways for a bit, stays within striking distance of that, call it $16 price point, spends a little time, and then starts to rally above it. That would be your key that, yes, Lyft has buyers. They would have tried to smack it down, and they weren't able to because the number was good, and buyers start getting more aggressive, and then you get that next leg higher. But yeah, this is pretty nice. These are our automated trend lines. You can see that's a pretty substantial breakout. Dates all the way back a year ago to February 9th, 2022. So
major fuck up on their release though last night, because they put out on their initial release, and you see, and after hours it goes all the way up to 20. Right. They put out that they're projecting for 2024 a 500 basis point increase in their profit margin, and then they came out around 30 minutes later and said they accidentally added a 0, and it's actually a 50 basis point increase. And then you see the stock drop from 20 down to 14. I'm not going to say that's a manipulative, that very well could have been an error, but that is a hell of an error to put out on your earnings release, where you say a 500% increase is actually a 500 point increase is actually a 50 point increase. I mean, I don't know. Someone lost and someone made a lot of money off that mistake.
All right, so let's take a quick look at the market, see what it's doing, where it's going. Start with the D1, and we can see that we've got this super, super strong rally. Now, you'll notice this red candle here that looks very similar to the one that we saw yesterday. And you've got this big drop. It's a key bar. And you might be thinking, oh, well, look, the next day the market bounced right back, and then it made a new high, and then it went even higher, much higher. We should see the same pattern right here. The context is different, because this high on February 2nd and this drop came on the FOMC statement. We had just had mega cap tech earnings. We had another dose of major mega cap tech earnings coming out that Thursday. Then we had the jobs report. So we had all of that news to fuel this rally. Right now, we've got the drop on the CPI number, which the CPI came out at 0.3%, 0.2% expected. So it's going to take the blame for this big, nasty market fall. Inflation is coming back, everyone. Look out. It barely ticked higher. What this drop had to do with was the fact that you had a lot of people lined up to take profits. You had bullish speculation running a bit frothy. This was natural selling pressure. And you can see that in the price action yesterday. So this is the price action yesterday. We had a fairly wimpy attempt to get into the gap, and you can see mixed overlapping candles. In here, we had a nice bullish 1OP cross. So there's your gap for the entire day right here. And then we get this nice wimpy little bounce, mixed overlapping candles, tiny bodies. That tells me that sellers are keeping a lid on it. This was where we had the potential to have a nice move into the gap, a nice gap reversal possibly. Well, here is where you would start getting long. You get that tick, tick, tick higher. I'm not getting the move I had expected. I was looking for some long green candles into the gap. So when you don't get them and more time elapses, you have more proof that sell, 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 sell. That is getting hammered down. So you start taking gains on your longs. If you're in stocks with relative strength, you did very well. You had profits in them. So take the profits. Even if it was a scratch, take the scratch. You're not getting that release into the gap that you were looking for. And I'd mentioned this in the chat room. I said, this is starting to look more bearish. And I gave a timeline of 15, 20 minutes. I'm like, we don't get that green candle in 15 or 20 minutes. I'd start paring back your long positions in here. And then 1OP just stayed bearish the entire rest of the day, which is also a bit bearish when we see that. But then you get this long red candle off the high, and this is when you need to be careful. You have an attempt off of VWAP to rally back to the high, and that is squashed immediately. So right in here, if you weren't out here, in here, it's time to get out of those positions. And now you can see how the selling pressure builds through the course of the day. But this is a bullish market. They die hard. So into the close, you get this last half hour, and this is very typical in a down day like this, is you get this release. Well, what causes that? Is that all asset managers deciding that this is the time to buy? Well, this is a lot of bullish speculators taking gains from the day. And then as they cover, the market has this little late day bounce. The trap today was coming in and seeing this bounce and assuming that we were going to get a move just like we saw on January 31st, and we were going to be off to the races and fill all of this right back in. I figured that buyers would come in and they would quickly exhaust the move, and that sellers who were active yesterday will view this as a very good opportunity to lighten risk, and that we could see a reversal, and then getting these bullish speculators out would be fairly easy because they'll have to start covering their positions. So what are we going to do from here in? We have a downward sloping channel here. I'm not looking for a big market meltdown in here. This is just a bid check. If we take out this lower line, and I'm going to drop a trend line right now, it's actually an alert line, and I'm going to click on those two. If this gets triggered, we're likely to see a long red candle through that low of the day that fills in the gap. And on that type of a move, I would view that as a likely selling climax. And so right now we've got a bullish 1OP cycle starting, and I believe that VWAP will lend some resistance, and then we should see that next move lower to kind of take out that end of the selling climax. Where we go from there, I don't really know. It's kind of a quiet day in here. For the next week or so, I am looking for some soft price action. We don't have the news to spark a lot of buying interest. We've already seen some cracks in the dam here. So I think that staying on the sidelines as far as your swing trades is going to be a good thing. We're also seeing bonds pull back. I'll put up TLT very quickly. They have broken a major horizontal support level. It's amazing how the market has gotten interest rates wrong for a year and a half, in my opinion. They're all looking for for a quarter point rate cut in Q1. Ain't happening. So there's your horizontal support right there. And you can see how TLT is above the 100-day moving average. If we take out this support level, which I believe we will, it's going to weigh on the market. So that
got an interesting question here.
Yep.
All right. So relative strength, relative weakness, always a lot of questions on that. Does it change in a bull market and a bear market? And the short answer is no, it doesn't, but it does in a way, and I'll go through that. So think of, there are different types, right? Now, let's say the market is going up and you're in a bull market, the day is up. You have stocks that are relatively strong because they are going up proportionally more than the market is, right? So let's say a day like today, you have a day like today where SPY is up, it's up around 0.3%, but you have a stock like, let's say, Lyft that is, or Meta, that is proportionally stronger than the market, and is what has relative strength. Conversely, if you have a bearish market or even a bearish day, you'll have stocks that are down proportionally more than the market is down. So they're both down. The market is down, the stock is down, but the stock is dropping faster than the market would normally indicate, right? And you can think of it like this. If you didn't know anything else and someone said, oh, the market's up today, going to be up by 1%. How much do you think, Apple will be up? Well, proportional to the market would be the guess, right? And then you look at it and it's up much more or not. So there's your relative strength, relative weakness. The other type of relative strength, relative weakness, which can indicate an even stronger move, but is mitigated against the market, and I'll tell you what I mean, is let's say you have a day like today, or even a day where the market was up $8 earlier this week, and you have a stock that's down, right? Now you have a stock that's extremely relatively weak. For a stock to be down on a day where the market is up quite a bit, you need to have strong institutional selling in there, right? You have a directed selling on a stock that should be going up, but it's not, right? The market's up, it should be dragging that stock up, but it's dropping. However, it's hard to short a stock like that because the market is up, right? So you're shorting against the market. So even though you have that gravitational pull from the stock itself pulling it down, the market is acting against you. Doesn't mean you can't short in those situations. Doesn't mean there aren't times, just like when the market is down, there are certain stocks that'll be up. And it doesn't mean you can't go long in those situations. It just means that it actually is a little bit more difficult. So you have those kind of four scenarios. If you're in a bullish market, the only thing that, what makes the difference is when you're talking about swings, when you're talking about, you see a stock, you're looking at the daily chart, it's relatively strong on a daily basis. You're in a bull market, you can have more confidence that, yeah, you might have a down day or two, but overall the market direction is up, the stock direction's up, and barring any news event, it should continue along those lines. So, it's just sort of your staying power in a bull or bear market. But you just, the concept of relative strength, which is always going to be there. It's not, there's nothing that can ever take into account that, eventually too many people. It's simply a math equation. It's simply proportional to the market. Is the stock strong or weak? And that's always going to be the case. That'll always be a condition. So whether you're in a bull or bear market is really more mindset, how long you can hold it. And, there are more cases in a bear market where you have stocks that are relatively strong while the market is going down, right? So you have individual stocks, usually a tech stock or something that will be going up as you're dropping. But that could be a one-off for the day, and you might not have confidence that it's going to be some holding power. So there's a lot more, believe it or not, day trading in a bear market and a lot more swing trading in a bull market. But that to me is the primary difference that you'll see, not in the concept itself.
I would agree with that also, is that the market tends to go higher more than it goes down. So 80% of the time the market is flat to moving higher. And that alone makes shorting very, very challenging. And so you'll get these really big drops to the downside. Well, if you don't take profits on those big drops, you're going to have that thing spring back on you, and you're going to leave a lot of money on the table. And so the way to trade those bear markets, as we did in 2022, is to be very nimble and to focus on day trading more, where you had expanded intraday ranges. So very easy to get into positions, take your profits, get out of those positions on big drops. So right now, as I just flip through some of our bearish searches, again, the qualifier here is we're not looking for bearish trades, okay? For most of you, that is, for novices, because then you're going to be contra trend trading. But J&J, you can see, has a lot of really good qualities for a short. The market D1 chart, right-hand side here, up, up, up. What has J&J been doing the last 2 months? Down, down, down. All those major moving averages, it's below them. It's below the 100-day moving average today. It's below AVWAP-E. It's below all this stuff. And then there you can see orange line below zero, relatively weak. Oh, goody, Pete showed me a great short. Now I'm going to go out and buy some puts on J&J because it's falling apart. Not wise. We are in a bullish market. So you want to focus on the long side. Your mindset right now, as I mentioned earlier, is take your foot off the gas, reduce your longs for swing trades, and wait to see what happens on this dip. Brief and shallow.
Off those helium balloons.
Brief and shallow. We're going higher, okay? You can get a little more aggressive with your long positions if it only lasts a week. If it lasts 2 weeks, you probably have to lean more to selling some out-of-the-money bullish put spreads. You can't get as aggressive with the longs because we still could see additional selling pressure. But at least on a bigger drop, those option IVs will be higher, and you'll be able to distance yourself from the action. But your focus should be buy the dip, buy the dip, buy the dip. Not, gee, I'm going to be a genius and I'm going to short a super strong market like this. And then you're going to have your ass handed to you and you're going to wonder what went wrong. Well, this is what went wrong. You're trading against the market. That's what went wrong. So yes, in a bearish market, this would be a nice short because we already see the weakness.
I have on J&J, I do have some horizontal support at 155, and then I have a descending trend line when you take the bottom of January 2nd connected to the bottom of February 5th, bottom of February 8th, and it comes right into the low of today at 154.90 and bounces off that. So I'm putting an alert on that at 154.75. Make sure it clears through both that horizontal support and that descending trend line. And if it does that, I'd be happy to short J&J.
Yep. I see your line and I've got the alert set. We might even get it right now. So we'll see.
Yep. Peter, you asked, you said, I said not to go long if the market is down in the wiki. Do I mean if SPY's below the close, but below today's open, below VWAP, comment section, and clarify. So I want to make clear, I did put in the wiki for people who are struggling, right? And that applies to a lot of people. Some very basic rules, and which is not to get cute, basically. That look, if the market is up, go long. If the market is down, go short. Don't mess with the stocks that are relatively strong on a down day or relatively weak on an up day, because that takes a little bit more experience to navigate, especially if it turns against you in terms of staying power for it. So that was specifically designed for people. Look, if you're struggling, follow these 3 or 4 steps, keep it very simple, build a foundation, get the muscle memory going on how to do this. Then you can start doing more complex trades, right? And it, to me, you know, people love, particularly beginning traders, love to see rules. And a lot doesn't go. There are very few hard and fast rules, and everything is so contextual. And so, you know, you got to take so many things into account. But in that case, I wanted to give people who are struggling, here are 3 or 4 very basic things. Get this right. Yes, you'll miss a lot of opportunities. There are a lot of things you could have maybe made money on, but here, you know, you want to just get solid trades, solid wins under your belt. Follow these very simple 3 or 4 steps, do that, and then you can start moving on to other things. It wasn't meant as a, this is never go long on a day that's down or never go short on a day that's up. It was more for, if you're struggling, keep it very, very simple. Let's see here. Market trying to test VWAP again here. It's done this a couple of times after that initial drop. But I don't really see any volume behind this move up. I don't have much confidence in it at all. So we'll see how it goes. But right now, I'm looking at Meta, by the way, which is looking pretty strong at the moment. I already have a position on Meta, but looks strong. Obviously, if I look at the sectors today, I'm going to see healthcare and tech up top. Energy kind of flat. Consumer defensive is down at the moment. And let's see, the reason it is down is because you have, Kraft, you have Budweiser, you have Hershey. They're all down today. Pepsi is down today. All your staples in that sector are down. So, but tech is really the one that's driving today's push up. And if you look in tech, a lot of Bitcoin going on here, a lot of obviously Lyft, Uber, some good earnings overnight. This is not a strong move up. You don't see your Apples and Microsoft really kind of leading the way, but it's you know, kind of a flat day to me. I really don't have at the moment. I'm bullish overall, and I do think we're going to head over 500. Like you said, it may take some time. But I do think that we're going to spend some time in this sort of low trading probability zone.
I'm going to take a quick look at Meta. And you made a statement that Meta is pretty strong today. And I could see a lot of people taking a look at that chart and going, well, that doesn't look strong to me. So here's the relative strength. You can see how Meta gapped higher, and it's been able to preserve the gap the entire day. So all of this move has held. And you can see how it bounced recently with this rally right here in the S&P 500. But look what the S&P 500 has done since the start of the day. It's well into the gap and drifting lower. It has not preserved this move higher. So ideally, you know, what we look for, let's say, green royal flush as an example of a search that you would use, is you want to see that nice, steady grind higher. This is too fast, too soon. When you get these fast moves out of the gate, I urge you, go look at the news for the company, find out what they do. Oftentimes, this is nothing more than just a technical rally. It could be short covering through a technical resistance level. It could just be a head fake, and you'll get these reversals. Well, obviously, the market reversed this move higher because the stock is very volatile. Do not chase these moves higher. Why is the company worth so much more this morning than it was yesterday on the close? FOMO is one of the biggest issues that novice traders have, is they see every breakout as the real deal, and they go chasing after it. And as soon as they buy up here, an hour later, they're thinking, oh my God, Not again. Seriously? This looked like such a good breakout. Well, you're missing this. What is that market backdrop? What's the context for the move? So yeah, I'll see if I can find something that looks like it's just grind. Uber's not too bad. Marching higher. I'll
So I
find
asked
one.
about CRM. We like that. Yeah, I like CRM here. I mean, it does have earnings in 2 weeks, but you do have some time on it. There's a minor gap fill that happened here, just filled the gap. So I'd like to see that gap fill get confirmed. I'd like to see it stay above there, but I don't see any reason why one wouldn't maybe do a call debit spread on CRM. That seems like a safe bet. Um, I mean, again, it's not probably the best one out there, but it's not bad. Sean, I pick my sector analysis. You can get it from Option Stalker. You can get it from TC2000. You can get it from, hell, you can get it from Finviz if you want. I mean, there's plenty of places you can get sector analysis from. Option Stalker provides sector analysis straight up. There's all the sectors, how they're doing today. I tend to like to look to see what sectors are leading, what stocks are leading those sectors. So, but CRM, I like CRM. I mean, again, I think there's better, but I wouldn't say it's a bad trade.
Yeah, so here's your different sectors, and we're actually adding a very cool tool that you'll be able to use. And across multiple time frames for all the sectors, we have LRSI, which is an indicator that we use, and it will be on an M5 or D1 basis. So you could put all those time frames across here. And if the LRSI is above 80, you'll see a solid green dot for that time frame. If it drops below 80, that's the start of a sell signal, and you'll see a hollow red dot. And then if it goes below 20, you'll see a solid red dot. And it's pretty cool because you can actually see which groups and sectors are starting to gain strength and weakness. There's a couple of disadvantages to using sector analysis, and one of them is that the stocks are very hard to categorize because they have such broad-based product lines. It's like, gosh, where does this company really even fit in? And so when you're looking at retail, for instance, very, very different types of companies in the retail sector, ranging from, I guess, Amazon could be in the retail sector. Well, Kohl's department stores could be in the same sector. And there are other sectors like energy where you get very, very high correlation between the companies because they're all in that same business, and they're all their profits are very dependent on commodity prices. So those do tend to move in tandem with each other.
Let's see here. Getting a lot of concerning headlines coming in, but all right, that's not impacting the market, so nothing to talk about here. Looking at FDX dropping, good. See, this is what I like to see. The market is consolidating, maybe even moving a little higher here towards VWAP, and FDX is dropping. There's your relative weakness in the stock today, and that's why I bought back those short sides of the spread. So. Someone wrote, crowd looks good to me on the D1. Not just about everything looks good. When the market's at, let's be clear, when the market's at an all-time high, if you don't look good on the D1, it's probably a really shitty stock. Yeah, crowd looks great on the D1. You have a very clear channel on cloud here. Let me just look at that channel here. I'm just going to draw this line up here. By the way, J&J just crossed below that trend line. I just got the alert. So there's your short ready and served up. Alert comes up on J&J. You have a nice short waiting for you. Looking at this channel, I'd like to see crowd break out of the channel, but look, it's up $10 today. It's at 332. It doesn't have earnings till early March. Crowd is actually a really good, and what I might take here, call debit spread candidate for a long. So if you're looking for a good long, and that was pointed out by, and I always like to credit on a good call out here, James. Thank you, James. I do like crowd here. I like everything about the daily chart, the distance away from earnings. It's relative strength today in the market. The sector is doing great. The industry is doing great. Yeah, I think crowd's an excellent choice.
So here's a tell. And if you were trading yesterday, you got a market that opens lower, and look at this first bar in crowd. Do you think there are sellers here? Heck no, there are buyers. Look at them drive that price higher. So you get this kind of drop and then stacked candles. This tells you, and let's put the SPY overlay up. So that's the market drop that you have yesterday on the open. There's what the stock does. Gap reversal right out of the gate. Okay, now we get additional selling throughout the course of the day yesterday. What did crowd do? It held its own. How is this possible? The market is going down and the stock is not going down. Why does this happen? Because there are buyers. They are not looking at the market yesterday. They don't care about the market yesterday. This is long-term money coming into the stock. Will that long-term money always be there? I don't know, and I don't care. I know that if I'm looking for an overnight market bounce, this stock is probably going to be a good candidate. And then into the close yesterday, you see how it's starting to lift off. So yeah, you could pretty safely take a position in crowd because the market has already shown you what it's doing, and the stock has shown you that it still has buyers. Even when the market is down, the stock is up. So that's a big tell, and those are things that you should be looking for. PANW, same deal.
Just saw in the chat room a short of General Mills GIS. It looks good. I like the short. Just keep in mind, take a look at the candle on October 6th. Take a look at the candle on October 12th and even October 13th. You see that that's providing some, not a lot, some horizontal support here, right around 61.50. So, I mean, for something like that, I might have been, it's not a stock that's going to move a lot. You know, General Mills is a very boring stock, but it's a steady stock. Kind of choppy on the D1 actually, but the ATR is only $1.27. I would wait for it to break below $61.50. But you know, really, it looks good. It's just nothing you need to rush into there. Kicking myself over CRISPR. Of course, I closed CRISPR, took the loss on that, and then now you see CRISPR just continuing to power higher, day in, day out, well above where I bought it a while ago.
So GIS, you see these three stacked long red candles. They're key bars, in fact, through that horizontal support. The novice is going to go, I got to short it. Look at that. Look at that selling pressure. Heavy volume. I'm in. For crying out loud, they make flour. They make food products. Is there anything that is going to be that disastrous for the company that all of a sudden you've got to sell the living daylights out of it? No, this is a sell order, okay? So the bid was pretty soft. Stock has been heading down. You do not have to short in here. Wait for a bounce. See if it can recover half of that long red candle. If it can't, then you know that's resistance. You can enter up here, but you don't need to be shorting it down here. I can pretty much guarantee you that by the time we're done talking here, this stock is going to be higher than 61.64. You're going to see it recover, but you're going to have people in here shorting it down in this level, and they're going to be trapped in the trade. And by the end of the day, you're going to be wondering, gee, do I really want to hang on to this short? Should I take my loss? Be patient. Know what the companies do. So yeah, we're getting this test right now. We've got a bullish cycle that has about half of it to run yet, and we're right on that VWAP level. So we'll see if we can break out above it. I would not want to get much above it, kind of from the short perspective that I'd mentioned earlier, where this downward sloping trend line would be breached. So we'll see if it can poke up through it. If it can, okay, well then we've kind of had our bid check through the course of the day, and when the market could start to recover and climb a little bit higher on this bullish cycle. So we're just kind of watching, see what happens in here.
Hold on 1 second. All right. Someone asked here about a couple of stocks. So PLTR is the first one. It's been a popular stock as of late. You can see it's in compression on the D1. It had a nice earnings bump there, bumped up again, and now it's forming a pretty good bull flag on the daily chart. I would simply put an alert right at the top of that compression. So you put an alert in at, I don't know, 25.50, somewhere around there. Wait for it to break through the top of compression. And then, yeah, PLTR becomes a nice long. And then someone asked about HE short. HE, not the most popular stock in the world, but yeah, I mean, it's a cheap stock. It has a very low ATR of only 50 cents. It's a decent short, but I really don't think that you're going to do much with this. It did break below an ascending trend line coming off of November 30th. So it's a safe short to take. But again, you know, you're not really going to take, you're not really going to make a lot of money on that unless you have an oversized position on it, because you have such a small ATR. Always look at that ATR, by the way. It matters in terms of what you're expecting. I mean, when the stock is at 50-cent ATR, sure, it's a $12 stock, but you know, you're not going to get these huge moves unless you have a news event pushing it. So that's a PLTR.
Yeah, so
you have some other stocks, but Pete, if you want to chime in on those two, particularly PLTR and that compression on the bull flag there.
yeah, HE, it's a utility stock. So, you know, you look at this, it's sideways, it's up, it's down, it's just chopping back and forth. So even though you get what looks to be a decent breakdown here on a daily chart, you can see if you zoom out, this thing is going nowhere fast. So you're going to have to wait a long time to make your money on that. And most traders, quite honestly, they don't have the patience to weather that. They get kind of tired of waiting for the move that never comes. PLTR, yeah, I like that. I like the fact that it was able to make that big jump, and then now it's just compressing. I like to have about 2 weeks after earnings to let this kind of play out and let the stock show its true colors. Those true colors are that this horizontal resistance level that was breached around the 2250 level has held. You had a very nasty day in the market yesterday, and that's the candle from yesterday. You can see that if this was all fluff, you would have seen a long red candle down. Never happened. In fact, it's above AVWAP-E. So yeah, I like PLTR. If it continues to hover here, you can consider selling some out of the money bullish put spreads, keying off of the $22 level or so. So sell a 22.20 bullish put spread, try and get 40 cents for that. I think that would be a good trade, but would like to see just a little more time. I would have confidence right now, because if it was going to sell off, it would have sold off pretty hard yesterday, and it held very nicely. Good pick.
Bernard already answered about CRISPR. Netflix, great relative strength today. Yeah, I love Netflix. Great stock right now. It might be my pick of the day. Maybe Proud, maybe Netflix. Both of them are great. Netflix is perfect for a call debit spread. If you take let's see here on Netflix, if I were to trade Netflix here, you could do a 575, 580 call debit spread for maybe around $2. That's probably a good bet to do. So you buy the 575 calls, you sell the 580 calls, they expire on Friday. You do that for a $2 debit. I think that's a pretty good, a good bet. And TAL, I also love TAL. It's a pretty good stock here. It's got one of the better D1 charts you'll see. Broke out of a mini compression at the high of the day today, continues to power up. It's not expensive stock, so that's one where you just buy the stock and ride it up. So TAL, also a very good pick. Some really good picks coming here. So thank you, Tim, on TAL. And thank you, Jose, for Netflix. Both of them are excellent picks. Take a look at Netflix and TAL there, Pete. Tell me what you think.
Yeah, I saw Netflix earlier this morning, and that's one that I've been waiting for that stock to wake up. TAL, I really like that one. So Netflix, yeah, when I look at that, that was another earnings gap up, and that gap had held very nicely. You can see the compression, AVWAP-E right here, lending support, and now we have this breakout above this downward sloping trend line. So if Netflix is not Harry's pick today, it certainly would be mine. So like that TAL, I like the price action here. Very nice. You can see how it's been adding to this breakout. So having the breakout alone is not enough. The breakout is what gets the stock on our radar, but we need follow through because that's where we make money, and that's the confirmation that we need to know that this isn't just a head fake, poke through and then drop right back down into this compression. Got the follow through. Volume a little light, but I like the price action. Let's see the volume today. Also, not great. So you're kind of, and so light volume. It's probably something I should address.
Yeah.
Light volume, will it keep me out of a trade? No. Light volume to me simply means respect the move, look for that tight pattern, look for those stacked candles. You need those elements. You need that price action. Light volume simply means trade smaller because I don't have the big boys in there. I'd rather have lots and lots of volume that I can lean into because then I know that there's some big money joining that move as well. So lower volume, keep the size smaller.
Someone's worried about the price action on VKTX because of the 5-minute bars, the drops. I mean, just ask yourself, is it still above VWAP? Yes. Is it still relatively strong today? Yes. Is the daily chart still excellent? It broke out of compression on a mini bull flag on the daily chart. Yes. Above all the SMAs. Yes. Again, all yes, yes, yes. I mean, all that would do is gives me a good entry on a VWAP check there for VKTX. As you see, it bounces off and now it's headed right back up. Would not worry about it. In fact, probably wouldn't even worry about too much of a drop below VWAP there, but it's still a very good trade. VKTX is an excellent pick as well. Some really good picks. Thank you, Leo. And NU is also a good pick. It's not, again, this is a cheap stock with a low ATR, but, you know, it has all the technically, if you look at NU, it looks fine. It's just a financial holding stock. So someone asked about how I use ATR. I look at it. You know, it's just something to keep in mind. It's just another piece of information, right? So if I'm trading a $200 stock and the stock has an ATR of $1, well, okay. I mean, look, usually the stocks you're trading are going to go and you're trading them because they're outside their normal bounds of the ATR. If a stock typically moves $3 in a day, plus or minus, and the stock's up $6 that day, that's usually why it caught your attention. But you need to keep in mind, you know, some stocks are just very choppy and they have this huge 18 that just go all around back and forth. Just look more at the price action of the stock. But, you know, if you're doing something like a call debit spread and you put a $5 gap between the two and the ATR is only $1.25 and you have 2 days left in that debit spread, it's probably not a good idea because you need it to cover that gap in order to get full profit. So, you know, I just keep it in mind, but it's not a major factor. It's just something I glance at for each stock. That's all.
All right, I'm getting a couple of questions in here as well. And CELH, I don't think we've covered that one. CELH, so bring that up. And you can see how the stock has been able to hold the gap. There's the opening price, checks that price early, and now it's been able to rally above VWAP, go into the daily chart. And the daily chart pretty choppy, trying to break through this horizontal resistance right here. So I'm not crazy about this volatility in here. I'd like to see this breakout hold and then it can continue higher. When I see this kind of tight chart pattern, folks, I run from it. Okay, I don't need this crap because on every one of these breakouts, here it goes, and it falls apart. Well, I don't want this. I want that nice straight 45-degree angle from the lower left to the upper right. That is what I look for. Lots of consecutive stacked green candles. That's what I can predict. Then I can predict where that stock is going. If I look at JPM, that's a stock I can predict where that's going, okay? This sideways shit, you got to get it out of your mind that, oh my God, this is a breakout. It's a breakout. I got to have this. This is a good stock. That choppy price action before, that tells you what to expect from the stock. You have to avoid that stuff. I see it all the time. And if I sound a little emotional about it, it's because I see it constantly over and over again. So can you go in and scalp some gains out of it? Yeah. Is it ideal? Not really. This stock, if I go in, I can hang on to this overnight and I can ride the heck out of this move. I don't have that latitude on a stock that's just been in a choppy sideways pattern.
VST, thoughts regardless of earlier impact? VST, very simple. If you're in profit right now, take the profit, get out of the trade. If you're not in profit, don't take the trade. That's about all I have to say about that stock. I hate fucking utilities. I just do. Okay. Let's see here. Really like Netflix here. Really like Crowd. Like them both. Want to take a trade on one of these. But I don't want to go long just yet. I would like to see the market get above VWAP. And it's not doing that. It's trying. You can see it desperately trying to get above VWAP here. Really, really giving it its all. But until I see that, I'm seeing very low volume candles here on SPY. And I'm seeing its inability to get above VWAP today. So it doesn't mean I won't take Netflix. Doesn't mean I won't take Crowd. But I have a feeling I'm going to get them at a much better price if I hold on. Because I'd like to wait for this pullback on SPY, which I believe is going to happen, may even begin to happen right now.
Yep, and you're seeing this 10P cycle start to run its course, should complete fairly soon. When you get this crossover here, we start testing the downside, drift, 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 drift. And if we get that long red candle through the bottom of this lower trend line, that's going to be our selling climax. And we probably are going to see a low soon after that. But overall, if that plays out, you'll see that the market is starting to see some selling pressure based on what we saw yesterday, based on what we saw today. It's not go, gotta have it. Buyers are completely in control. No, that would be the takeaway from what we've seen the last couple of days, is that we can expect this upward momentum to start to wane, and we get into more of a trading range back and forth while we work off some of these gains. That would be fine. If we don't get the dip, a compression would be fine. That would be a sign of strength also. So it's kind of a holding period right now. MSTR, I had a question on. Coin, I've had a question on. These are all your cryptos right now are running. Mara, that's why I put that naked put right out there in my Sunday video. Yeah, I like the price action. I think these stocks have incredible implied volatility because they move around a lot. So at this level and this breakout, yeah, I liked selling that naked put a lot more than I do up here where the stock is hitting resistance. Coin is actually breaking out. This is a pretty nice breakout. Just realize that these stocks move like the wind. They're in favor one day and then they're not. So if you're day trading it, fantastic. You can do some call debit spreads to try and eliminate some of your risk. It's really good for these types of plays. So yeah, I mean, the chart looks good. It's bouncing. It's through some technical resistance levels. It's got decent relative strength today. So yeah, today looks really good. I'd be one that you could day trade.
So it's like a H plus trend line on Crowd. I'm looking at it. That trend line doesn't come in until 340. You're drawing it from, you're doing it correctly. You're drawing it from 1215, and then you're connecting it to the next one at 1218. Then you're going right over to 124, and then it's crossing through 29, and it's coming up at around 340. You have $8 on Crowd before you come up to any serious resistance there. So wouldn't worry too much about it. AQM1 is a stock screener set up in the wiki. You know how you can find that out? Read the wiki. That's the best way to find out if there is a screener set up in the wiki. You have to read it. And do I enter a trade without price target? Something like this is great strength. Chart looks good. I'll just watch the price action, determine when I'll get out. What you basically just said in quotes is pretty much what I do. Yeah, it looks good. I'll watch it and determine when to get out. I generally don't put a price target on. I mean, I might in terms of profit amount, like, okay, I want to get $2 profit on this option, right? I got it for $4. I'm going to put it to get out at $6. That's more along the lines of how I do it, rather than I'm looking for the stock to get up to this, unless I see a very clear resistance point and I'll put an alert there, in which case I'll watch it. If it doesn't get through resistance, then I'll close the position. If it does, I might even add to the position at that time. So, but usually it's more of a profit target than a price target on the stock. But 6 to 1, it doesn't matter. You can do it either way. Probably better get yourself wrapped around technicals to think of terms of price targets on stocks. I just don't do that. That's all. But either way, it's fine. I do like
for me personally. For me personally, I have expectations that I set when I get into a position. So I'm not very rigid in terms of this is absolutely, man, if it gets to this price, I'm taking my money and I'm out. It's a constant evaluation of what's the market doing, what's the stock doing, what did I expect both of them to do? Are they behaving as I expected? Because there are going to be some times when I might get into a position and let's say that I think I can make $2 on a call option and I'm expecting the market to hit resistance and that's going to be the high of the day. And lo and behold, the market breaks out and it blows through that resistance. Reset. Okay, I expected the market to be contained for the day and now it's breaking out to the upside and the stock is participating. Well, now everything has been reset. My expectations for what the stock might do and what I might be able to fetch for those call options has changed. So it's that on the scene, boots on the ground analysis that takes place continuously that determines when I'm out of a position. There will be other times when I might think I can get $2 for this call. I'm expecting the market to continue to grind higher. I'm expecting the stock to stay strong and the market dips unexpected and the stock was more weak than I had expected it to. I'm going to get out of the trade. I'm not right. I'm being proven wrong. I think that I'm a little bit more in and out of positions maybe than Harry is. He seems to be very steadfast in his thesis and his analysis. I tend to kind of go with the ebbs and flows of the market and what the stock is doing.
I'm just stubborn. TPR. God, why are you bringing up stocks I hardly ever hear? Marcel brings up TPR. Yeah, I like it. I mean, it's decent. Nice breakout here today, a little bit above compression. It filled that gap from way back when on August 10th. You probably have a little bit of horizontal resistance here at around 44 coming from the June to August compression that you saw back in 2023. And so, I'd like it better if it got above 44, but, in general, it's pretty good. I just watched that 44 horizontal resistance. And if it breaks through, I think you're golden. Really tempted to do either Netflix or Crowd here. I'm still waiting to see if the VWAP break is going to be confirmed on SPY or not before I take it. I like the price action on UNP today, by the way, coming back up. So that option is recovering. I'm aware there's only 2 more days on it, but it's recovering nicely right now. So that's helpful.
GE with a big move today, and that was very strong yesterday. Someone had asked about GE in the chat room yesterday, and that is just beautiful price action. You can see how the stock pulled back initially with the market, but then not only did it get back to the prior day's close, it continued to build. And look at that volume there. And today, the stock is gapping higher. I'm just going to overlay the SPY, and you can see market down, down, down. GE grinding higher. Beautiful. So I don't know what's driving it. I know that they've got an awful lot, the big financial arm, but this has more than financials involved in it. So there's got to be some really good underlying news in the company.
I don't know why I have a mental block on GE. I mean, it's not like the stock's ever wronged me. It's not like it's a Boeing or anything like that where I've gotten screwed. It's on a no trade list. I don't know. It's weird. I just have this mental block on GE. I just get nauseated thinking about the fucking stock. I don't know why. But yeah, I agree. It looks great. I just can't trade it. There goes SPY. Bye-bye. Yep.
Yeah. So there's your breakout above VWAP, which this will often lure in bullish speculators because it's like, oh, there we go. VWAP, we're above it. Wham. So you need the follow through. I just mentioned you need that breakout that gets it on your radar. Then you need follow through. Well, that's why we wait for follow through, is now it's just been rejected and you're probably going to see some more selling pressure. And guess what? 1OP had just started to cross here. So we'll see if we get down to this line here. We'll keep taking a look for stocks.
That is one of the most important. A lot of you are calling out individual stocks, which are great. Trying, if you ask about UNP, I'm going to rip you. I said a million times, if I'm in a position, I will post an exit to the position. If I don't post an exit to the position, it fucking means I'm still in the position, and I'm in the position for a reason. So there. The best lesson from this whole broadcast should be, we are looking at all these strong stocks, and I kept saying, I'm not going to go long yet. I'm waiting for a SPY break of VWAP. I don't think it's going to be able to sustain it. I don't think it's going to do it. I think that, get used to me as a new follower. Take the good with the bad, Trent. That I wanted to wait. I didn't like the low volume candles, and I thought SPY was going to pull back on this VWAP, and I'd get a better entry on perhaps Crowd or Netflix. And look exactly what happened. Tried to break VWAP, could not do it. The very next candle, bam, drops below it, and now we're dropping again. Try to get into that mindset. There is no reason to rush in on these trades. If you see a setup like this on the market and you're seeing this attempt for VWAP, wait to see if it clears it. And if it can't, then you're going to get your better entry as it starts to drop. Now I'm going to wait and see, is this drop real? Is it going to be sustained? Are sellers going to finally take control and bring us to try to fill the gap? Or are we going to get, is that just some, pullback here, and now we're going to get a real launch back up towards the high of the day? I still am very, very dubious about going to the high. I think we're going to probably have some more downside work to do. But what just happened on the market, that should be one of your best lessons today.
AMD, someone's asking about that. I mean, AMD and NVIDIA have been leading the market higher. So this is a nice little breakout. It's been compressing in here, so you don't feel like you're too far ahead of yourself. It's above AVWAP-E. So I like AMD. It just can't be my bullish pick today because I've been long it here and here and here, and I've highlighted it quite a few times along with NVIDIA. Look at that nice red candle on SPY. So I like the price action. I think it's a nice stock. I'm kind of trying to find something that's not in the tech sector. And tech stocks have been leading the charge higher. So if you're trading alongside, that is where you want to be. That was one of the appeals for me to Netflix, is that, they're considered a tech stock, but they're really in the entertainment industry. So that kind of gets us out of tech stocks for right now.
I'm just considering this UNP here. It's got some relative strength. Holding it and looking at 245 puts. Okay. All right. Got a question here on SMCI, NVIDIA. Both of them in monsters, right? I mean, SMCI, it's up, $46 today? The thing is just nonstop. It's at $837. At this level of extension away from its EMA, I would tread very carefully on SMCI at the moment. I would not. I'd not go long. And Nvidia right now seems to be moving with the market. So without market strength, I would hold off on Nvidia as well. But those are my two thoughts. But SMCI is just, I mean, my God.
And so here's the mindset. Here's the beauty of it. I want to buy Nvidia. I want to buy Nvidia. I want to buy Nvidia. So right now, when you got the market getting a little toppy in here and getting ready for a little bit of a pullback, this is when you evaluate. And if we get a nice drop in the market, and Nvidia, SMCI, AMD, they all hold the bid very, very well. When the market starts to find support, then you go in. What you don't want to have happen is during a market decline is that you start to see this stock get hammered. And you don't need to take that risk right now. So wait for the market to come in. And if it holds all these gains and it holds this, an AVWAP-E, you know as soon as the market finds support, this baby's going to go. So yeah, I think it's good. It's going to be great. I don't like to chase. And now we have an opportunity to watch passively from the sidelines to see what it does.
I just closed UNP, and I closed it for $3.20 because I really don't like the market. You exit UNP with a loss of $3 and what the hell was it? Shit. No. Let me see here. I closed it on both accounts, which it is actually strong today. It does look good, but I don't have enough time in it, and I don't like the way it's looking. So let's see here.
I think I found my
$3.68.
I think I found my pick of the day today. It's a stock that I highlighted in the chat room earlier today. And I got to qualify this. This is for seasoned professional traders because it's a short. I like Apple short. So do not go out gonzo on the short side. You wouldn't do that if you're a pro anyway. But yes, I think there are going to be some opportunities for us if the market shows some weakness in here for the next week or so to day trade Apple from the short side. And here's why I like it short. You can see the black line is a 200-day moving average. The blue line is the 100-day moving average. You can see how the stock has fallen below both of them. It also has fallen below the AVWAP-E. So when the market was down yesterday, it sold off and we had this gap and it never quite recovered. Today, it's breaking not one, but two of these major moving averages. And when the market was up just a few minutes ago, so we had an hour where the market rallied, what did the stock do? Down, down, down. It's got relative weakness. So I like it on the short side here. That'll be my pick of the day.
Apple short?
Yep.
Nice. I like
for day trading. For day trading. We are trading against market strength. So only as long as the market is weak would you attempt that trade.
I mean, I like this break of 2 SMAs today. So yeah. I mean, Apple is weak.
Well, what you know what happens, Harry, is the market puts in a little soft price action and we pull back, and then you and I do a video next week and the market's found support and it's starting to move higher and Apple pops on that support, and then I'll get questions. What about the Apple short that you highlighted last week? Do you still like Apple short? That's the aggravating part, and that's why I have to triple caveat everything, okay? Only if we have market weakness do you attempt Apple short. You don't get cute. Most of you want to be in buy the tip mentality, waiting for support. You are not shorting. So now that I've cleared the air, That's how I would approach it.
I found that people don't take caveats well for some reason. All they seem to hear is oh, go long on Netflix or crowd. But, you say, do this, but if the market stays above VWAP, or if the market remains this, and this, that's why you would get into position and all that. And all they hear is do this trade. The trade doesn't work out, and they go, wow, they get all pissed off. And they just don't hear caveats very well. Not sure how we can address that. Well, you really can't cure stupid. So, that's a big prevailing problem that people have. Yes, kind of nuance is lost on people, particularly people that don't have much brain power. If you haven't told by now, I just have no patience for lazy, stupid people, because look, I'm doing you a favor, actually, by telling you you're an idiot. And the reason I'm doing you a favor is because you're going to lose your money. And I don't say that glibly. Okay? I say that because I've seen thousands and thousands and thousands of people do it. And I'm not being hyperbolic when I say that. And if you're the person that I'm addressing, you probably have to look up that word too. It simply means that you have the stubborn capacity not to learn. If you should never ask a question if you haven't done all the work to research the answer first, if you haven't gone through it. And the fact of the matter is, trading is something, we say this every single week, unless you sorry, Chris, if you feel attacked, unless you're treating this like a job or graduate school. And graduate school, law school, and it's really the best analogy I can give for this, because I have personal experience. I've been through it. I've been through graduate school. I've been through having, defending your dissertation, all of that. So I can compare how difficult trading is to that situation, how much work you have to put in, how much study you have to put in, how much help a professor would be or not be. If you went up to a professor and said, oh, what is the answer to this? And it's like, yeah, that's right in the reading, which you clearly didn't do. They're not going to give you the time of day. Unless you treat it like that, you're just going to lose money. And you would be so much better off just buying SPY, buy the indexes, put your money in there, let it sit there and grow over the next 5-10 years, take the money and pay your taxes, don't pay your taxes or whatever. But if you want to trade, if you actually want to trade, then you really can't do it offhand. You really can't do it. This looks strong. This is the rule. It's relatively strong. I'm going to go long, buy a call. It has to be something that you've dedicated so much time, energy, reading, effort to truly understand it. You have to put your ego aside, and you have to learn this from the ground up to actually truly understand how to trade and how to trade profitably.
All right. I think we should wrap this up. We're about an hour and 20 minutes into it. And so I've got Netflix up, and this is your pick of the week or day.
I'll take crowd if you want to take Netflix.
Okay, I'll take Netflix, and you're going to take crowd, you said?
Yeah, I'll take crowd. You take Netflix. Let's run with it.
All right.
And you got Apple short, so.
Yes, an Apple short for day traders. And now what we'll be looking for the rest of the day is we've kind of failed around the AVWAP level, as we'll be looking for a leak lower. You've got support right here on this lower line, and you also have, that would be a gap fill. So I would be looking for support somewhere in there. The takeaway is that we can expect sideways movement. We're starting to see some selling pressure. We don't have a lot of news coming out over the course of the next week. We have a legal holiday Monday. That usually sucks some of the activity out Thursday and Friday. So look for the market to just kind of start moving sideways. It needs to digest some of these gains. So that's what I expect to see. And that means for you, you keep your bullish and bearish bets pretty small. You wait for those signs of support, and then we'll know based on this drop what we should be doing next Wednesday during the live event.
Sounds good. Happy Valentine's Day, everyone.
All right. Thank you. Happy Valentine's Day, everyone. And we will see you next week.
Yep. Bye.
Trade well.